My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to help make a little money. My job is not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. We just witnessed the mother of all frauds, a financial disaster of incredible proportions. And it didn't even matter one whit to the stock market. Yes, the ongoing FTX crypto exchange train wreck has meant nothing to the averages. And I think we have to acknowledge the strength of the market in the face of the Sam Bankman-Fried scandal. Worst case, we get a day like today. Dow dips 8 points, S&P sheds 0.31%, NASDAQ declines 0.35%. Meanwhile, the crypto economy has shrunk from $3 trillion a year ago to well below $1 trillion today. And at this pace, I got to tell you, I think it can go a lot lower. I think the owners of these tokens will be lucky if they only get half from here. The revelation that this industry is totally unregulated makes you feel like a local dope for owning anything that's connected to crypto. So the downside could still be enormous. Oh, yeah, I get decentralized, blockchain, superior, no central bank. We can stipulate that another monetary system may be a good one. But how about stipulating this? Cryptos filled with fraudsters are in charge. And I think they're practicing Steve Miller capitalism. They're taking the money and running. But forget about crypto, because the whole point is that it's a rolling collapse under the massive weight of chicanery. And what matters is it's got hardly any impact on the ridiculously resilient stock market. When we see a scandal that rocks the finances of millions of investors, typically you'd expect people to plow money into cash after withdrawing it from what are known as risk assets, including stocks. Now, I can remember when stocks used to be the riskiest of all risk assets, but someone came up with this crypto. Man, that is really risky. Sometimes you have to put this asset class into context. Stocks are part of people's portfolio, basics. And when other parts of the portfolio vanish, like crypto, investors are supposed to pull in their horns. I keep waiting for that to happen, yet it still hasn't hit. I thought for sure that the averages would get crushed today when James Bullard, a very smart Fed official, talked about raising interest rates by another 1 to 3 full percentage points, talking about 7% now. Seemed like the perfect moment for the market to process the fall from FTX. Sure enough, we started out down big as Bullard's comments terrified anyone who was hoping the Fed might ease up. With those losses, which at another time, say arbitrarily 6 months ago, might have sent the averages down 4 or even 5% when you combine them with what happened with FTX, just didn't stick. We shrugged them off for a substantial portion of the day. And even when the market pulled back near the close, it was well above its lows earlier in the session. This was a down day that showed great strength. So how come this massive alleged con, hasn't been able to bring down the stock market? First, it's entirely possible that the people who invested in this breathtaking crypto smackdown were just all small fry who simply don't have enough capital to impact the markets. Or maybe they're larger institutional investors who didn't have much exposure. Maybe they treated it all like a big Powerball thing, where you say, here's somebody, and get a lot of tickets and you throw it away. That might explain the lack of bleed over into the regulated world. Although, to be blunt, there are a lot of small fries now in crypto who used to be big fries. Big E fries, like Wendy's. Second, it might mean there's so much money out there, even a $2 trillion paper loss doesn't rock the boat. There's something I like about this theory, namely that we haven't seen big withdrawals because of the crypto collapse, and it hasn't hurt the purchasing power of those who lost money. They don't take money out of the stock market so they can live day to day. So they haven't pulled the money out because they don't need the cash. They're still feeling flush. I know there are individuals who've lost fortunes here, but they may not be representative. We're coming off 2 years where the government was incredibly generous about doling out checks to the American people, child tax credit, not having to pay your rent. I mean, these things add up. Third and most important, though, nobody cares about crypto because we've already been in a bear market for a year. That's the average life expectancy of this. Why do people stop selling? Because eventually everybody who wants out has already dumped their stocks. I think that's the answer. It's the reason why this market's gotten, let's say, resilient. The sellers are exhausted. The remaining shareholders, they may just be in for the long haul. That's why so much money's in index funds. People don't want to trade. They just want to own and own and own some more. The idea of selling at this level is probably, for the people who are left, is un-American at best and reprehensible at worst. Now that we've annualized the beginning of the bear market, back when the Fed just declared war on inflation last November, Wall Street get used to the weakness, okay? As a matter of fact, I think we actually become numb to it, as long as we're not dealing with systemic risk, just cyclical risk. See, other than the financial crisis, we've only had cyclical risk. From 2007 to 2009, the selling could keep going because almost every major financial institution in this country was insolvent. It made sense to pull out your money back then. Your mattress was safer. But this is not that kind of financial crisis. I'm not denying that the market could go lower from here. I definitely can. I'm saying we've come through the bulk of this earnings season, and so far we better start thinking about it. We haven't had that rough a go. Let's take let's pick the worst group there is, okay? The worst besides crypto, the software stocks. I read a brilliant piece this morning by a fellow named Sterling Auty at MoffettNathanson, who mused that the best performing stocks in the software universe were the ones that either maintained or lowered their estimates. His theory, he figures that in the end, investors step back and decide, you know what, the software stocks have come down so much that they're effectively been de-risked. A lot of good companies, a lot of bottoming stocks. That matters. It matters because these are the most expensive stocks in the market, even after plummeting for a year. Stocks that are often valued at high multiples to sales, not earnings, because the underlying companies are perpetual money losers. Now, this is an aggressive view. I don't like any of those money-losing stocks, and I never recommend them. I think it only holds true if we're in a situation where the economy doesn't get much worse. See, if inflation stays persistent or goes higher, and I don't think that's happening, but it's a possibility, and the Fed takes interest rates to some extremely high level, we could still get a severe recession that causes massive unemployment, really hurt the stocks. In that scenario, these software stocks would have a lot more downside. But I think we're starting to see a normalization of the supply chain and a major reduction in raw costs. We're seeing a thaw in the big chip shortage, something that GM's Mary Barr told me earlier today. We're going to be interviewing her later in the show. We're getting layoffs in tech, an industry that's been at the heart of overspending in this country, and overspending is one major cause of inflation. We also have a clear slowdown in investment banking. Huge reversal in housing sales almost always leads to a big decline in home prices. Tech and homes, they are important. Remember, bad news is good news in the stock market. I think we're looking at a wave of obvious tech layoffs that are about to come in the hundreds of thousands. And when you throw in the weaker consumer price index and producer price index numbers we've gotten lately, it creates a situation where the Fed doesn't need to tighten as aggressively. Later on, the fact that the stocks of so many richly valued software stocks didn't get crushed this earnings season, and that tells me the bear may be rapidly approaching the end of its life. Bottom line. Put it all together, and you can see how this market could be so resilient, even when the so-called J.P. Morgan of crypto, Sam Bankman-Fried, has been exposed as a travesty of a mockery of a sham. That's pretty diplomatically. I'd call him the Jordan Belfort of crypto, but sadly, he seems to lack the charisma to carry a Scorsese movie. I'd say let's fictionalize him. But he seems about as fictional as they come. Dick in Virginia. Dick.
Hi, Jim. I wanted to wish you and your staff and your family happy holidays.
Oh, thank you, Dick. And same to you. Same to you. What's going on?
Yes, I wanted to talk to you about Lilly. It's been a bit volatile lately, and I took advantage of that of about a 20-point drop when that insulin tweet was announced, and it's got a PE of about 55. And I'm wondering, with the possible approval of that insulin drug and Mounjaro, whether or not that could have an impetus for it to go higher, and also
this.
with the
let's
their
do this.
Alzheimer's
I've spent a tremendous point of my time of my life learning, and a lot teaching. And the way I do it is through the club. And I spend a tremendous amount of time working on Eli Lilly today for my investing club. And I want you to go listen, because it's got all the answers. I'm not trying to cut this. I am saying that I spent 5 hours on Eli Lilly last night. I would think the best way to get it is to show you what I had to say if you go look at what I did at the club meeting. Okay? Just putting it out there. Even the mother of all frauds didn't matter in this market. It all tells me that the bear may be near the end of its life. On Mad Money tonight, GM held its investor day earlier at the New York Stock Exchange. I sat down with CEO Mary Barra to learn more about the company's EV lineup and major headlines out there. Then Exponential Fitness has become a post-IPO winner. But could strong gains remain in its future? I'm talking to the company's top brass. In Palo Alto looks like it was a real good quarter. We're going to talk about it with the CEO. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.